Okay, welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper. Tonight's webinar is live Forex market review, so let's get into it. If everybody can read through the risk disclaimer, that would be great. For those on our YouTube live stream, I cannot see your chat, but if you want to chat to me, just follow the link that I've given and you can come into the webinar. For everybody else, if you have a question, just use the question box or the chat box to talk to me. So I'll just give you a moment to read through the disclaimer. All right, we'll move along now. If you don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at ACY Securities. And I'm a full-time Forex trader. I've been trading now for more than 15 years, mentoring for more than 10. If you want to contact me about the webinars here at ACY Securities, then just send me an email. My email is duncan.cooper@acy.com. And through the week, you can connect with the website, acy.com, go to the market news tab, or our YouTube channel, ACY Securities Australia. And if you want to connect with me personally on social media, Twitter, LinkedIn, just head over to my Linktree page and you'll get my handles there. You'll be able to connect with me there. And if you want to get access to my chart layouts and templates, then just contact Nathan.bray and he'll help you get set up. I'll put his details in the chat for you now. All right, that's in the chat. So let's move along. And it's been quite a big week with news items coming out. Markets reacting to the news items. So first up, we'll have a look at the news items that are left for the week. Big one for this week, the Eurozone. So coming up, this is my time, Queensland time, 11:15 p.m. got the Eurozone interest rate decision. Monetary policy statement, and then we have the ECB press conference at 11:45. So usually 11:15 till 12:15, it gets rather volatile. Not expecting any interest rate change, but it will definitely be volatile when we have the press conference. Unemployment claims from the US are coming out at 11:30 p.m. And again, US Fed Chair Powell testifies at 1 a.m. He was testifying yesterday. That can definitely drive the market, but he may have made the US dollar slightly weaker yesterday. So maybe he hasn't got much more to really influence the US dollar. We'll have to wait and see. And then in Friday evening, we have the US job figures and the Canadian job figures, but primarily the US job figures will be the big market mover. It was last month. So be aware what's coming out. Really, the US job figures, the Eurozone interest rate decision here is definitely going to impact the market. So be aware. All right, last job figures last month, we had a very heavy sell-off. We'll be moving all the way back up to a very similar level to where we were the previous month before the job figures. So as well, it's worth noting that we do have a daylight shift change in the US over the weekend. All right. So let's get into the charts. We'll look at the dollar index first of all. Now it's kind of breaking down a little bit after yesterday. Now, whilst this day chart trend is just breaking down here at the moment, now if we look at the monthly chart, we actually have a higher top, higher bottom. We're just trading down and within the range of last month at the moment. And on the weekly charts, we're in an uptrend. We've moved to a higher top, so maybe this is coming down to search for a higher bottom. So when we just look at the monthly and day charts, trend-wise, it's actually up, even though we're pulling back. So, and that pullback that's occurring on those higher time frames is a downtrend on the day chart at the moment. Okay, that'd be worth just understanding. I'm just going to draw a fib in here on the daily. It's supposed to be worth understanding where the range is. Where did we trade last month? Because often we're just trading within the range of last month. So that was February's low here up to the high. So it's worth understanding that we've had a spike down to 79% of the range of last month, come back up. We closed at that level yesterday, and yes, of course, at the moment we're trading just underneath. But if we close back above the 79% level of last month's range, then that could be where we're putting the bottom in. So it is just worth understanding, whilst this day chart is in a downtrend at the moment, what is its position relative to the whole of trading last month? Okay, so 79% pullback within the range of last month is often where we may be putting the low of the month to then move back up. So just understand the position of that. S&P 500, it has put, this is how I was looking at it on Tuesday. So it did pull back. I said, watch the 62, 79% area. It did pull back just a fraction beyond the 79. And then it's just starting to hold. It's obviously going to be waiting for the next news announcement, which is primarily the job figures. So is it going to hold this maybe higher bottom that's forming to move further up? Personally, on the indices at the moment, for me, they're way too high. I would much prefer a healthy pullback, at least a pullback on the weekly scale. So if we look at the weekly scale at the moment, this is very overextended on the weekly scale. This having 1, 2, 3, 4 weeks down would put it in a much less overbought position. And then you could be a buyer at a lower level as a new uptrend starts. So personally for me, I would wait for some kind of a healthy pullback, which it's not doing at the moment. So, you have to decide, are you prepared to be a trade and look for your setup at such high levels? All right, we're getting to the euro dollar now. So euro dollar has been popping up over the last 2 trading days. Primarily yesterday, popped up. And what I want to emphasize is, yes, we're going to a new high over the series of the last 4 weeks now, but the trend on the weekly chart is down here. It's moved to a lower bottom. This is corrective. Yes, it could come up to the 62%, 79% of this range if it really wants to. And we're also trading within this range here, but I'm just primarily looking at this range here at the moment. So now, the range isn't that large. I mean, where we're at the moment, we're pretty much just very close to 109. Now, last month, we were kind of trading between 107, 108. Now, we could, potentially, with the job figures tomorrow, wouldn't be out of any stretch of the imagination tomorrow to see another 100 pips move up if that's the direction. So we'll be at 110. Now, there's a significant high over here, which is a weekly high, 101.17. So I don't know where price will react to come Friday's job data. I'm a little bit on the fence at the moment on this pair, because it did started, maybe moving into a downtrend here, but some of the data that's been coming out over the last few days has popped it up. So I don't know how much of a real upward move this is. But in any event, on the day chart, it's up, rallying against the weekly chart. Now, most definitely I'm going to be looking up here if we got a massive pop up around the 110.17, 110 area. And, primarily I would look at that resistance area at 110.17 and 110.43. Because what I'll be looking for overall through the course of the month, if we are going to keep going up in the short term, is on this weekly scale, get my drawing tool in, we're in a downtrend here to a lower bottom. So at some point I'll be looking for a lower top to continue the longer term trend that way. So now whether it's going to get as high, we'll have to wait and see. But we could certainly be up to those levels by the end of Friday, or not too far past the job figures, depending on what happens today as well. So it's just worth noting where the major resistance level is. Where's the major trend? Major resistance up here at 101.17. The trend is actually down on the weekly, but a lower top could form up there. All right, so At the moment, I'm just a little bit on the fence on this pair in terms of trading it. Let's go back to my day chart. So if we just popped above this resistance area over here at 108.76 and a number of highs, 1, 2, and 3 here. So notably, though, in the London session at the moment, we're not able to hold above 109. So as I was saying, last month we were kind of trading between 107 and 108. So 109 could be a headache, and maybe we can't get up to 110 up this major resistance area over here. So it is worth starting to monitor what is going to be happening at 110. So at 109, this olive line here is last month's high. And we're just short of the 50% of the weekly range there. So, if you want to trade to the upside, I think, from a 4-hour run up that we've been having, you want to be monitoring a pullback. And you could be looking at 108.76 down to the 62% level at 108.68 as an area of support if we're pulling back. And can we continue up at the moment? And maybe just down to these highs here too. This kind of zone here would be a good area to look for support. Seeing as the day chart trend is up at the moment, this 4-hour trend is quite easily up as well. Can we get a dip down into this area? All right. Of course, when the job figures comes out on Friday, then it's really a question of, for me anyway, being on the sidelines, knowing my levels, and seeing what happens. This was a job figure move last time. So that's where we were when the job figures came out. So potentially we're going to be at the same level. If nothing too much happens from now till tomorrow, we could be at the exact same level. And maybe if the figures come out well again, we get a similar drop. So we are really back to where we commenced last month, really. Right now, the euro yen on the other side of the coin is really starting to sell off. Let's put in this lower top, possible kind of double top up here. I've been saying that this pair is at very high levels. Now it's overextended a little bit. It's coming down to this area of old support and resistance, but primarily it's moved below this top. Last week, that top there became support. That's broken. So at the moment, it's a little bit overextended. I would be looking at this price point, 161.86, as a intraday area of resistance now. So clearly we've moved below it. That 4-hour candle there was holding, and then we've dropped. And now we're testing the next level of support. Now, really, it's overextended. I don't sell at bottom of moves. It's draggy fib across the current 4-hour range. And primarily the first level I'll be watching is this high over here, this weekly high over here, where we got a little bit of support on that 4-hour candle. Let's drop it down to 15. Now this could keep moving down. So if it keeps moving down, drag your fib down. But really, I think it's looking for the next move back up so that you can sell. Now I do note this low over here as well. So it's one of the 4-hour chart. This low in here overlaps with 62% level, assuming the fib doesn't need to be adjusted. So that's 162.20. That would be a good level to watch for a retracement back to, assuming we can move back above the weekly high over here that we've moved below. So a couple of levels to watch would be either a move back to 161.86, and then can you see you set up to turn around there, or which is a much nicer level because it's a 62, so it's a fib level as well, up here at 162.20 with the 4-hour resistance there. All right, it's quite volatile at the moment. The euro yen, we had a very massive spike down here yesterday, which I thought maybe was going to see this come back up to these highs. But quite clearly, it was just an intraday bounce, and it is getting quite sharp in its sell-off. So if you can if we can see a rally, sometimes this pair can get going real quick, and it doesn't offer a rally if the market's starting to get a little bit spooked about maybe the dollar yen's up too high, and these yen pairs are up too high. This may just keep moving down to at least, it's back to the day chart, to come back down to this zone here without too much of a, you see this move down here, didn't have too much of a rally. So we could get quite an aggressive move down like that, down through here. So great if we can get a rally, we'll have to wait and see. A rally at some point, but don't get caught at the bottom and then it rallies. There's nothing worse. So get your fib drawn in and look at the rally points to see whether we can get a rally and then can it turn over. Nothing as much going on the euro yen at the moment, so euro pound. I've been discussing this area of support in through here. It's very choppy sideways. I'm anticipating maybe we're moving all the way back up here on a weekly rally, corrective measure at the moment, but this is awful at the moment. So if you wanted to trade this is support is around 85.43 from this low over here, and of course the sellers have been met around about 85.74. So it's very range bound, and in fact you could look to the outer ranges here and be even lower support if it could get down there. Yeah, look to the outsides because it's very range bound at the moment. I will just look at something else. It's not going anywhere at the moment, that pair. All right, let's get into pound dollar. Now it's popped up. It was holding at these. This is my 4-hour chart. It was holding at this area for last week and a bit, but it's popped up and it's completely filled this imbalance over here. This was the drop from the job figures. So again, like the euro dollar, this is pretty much at the same level as it was come on the last job figures. So it's just rather range bound. It's moved down, created a range, and all this movement's just come back up to the top of the range. Now, again, as I was saying on the euro dollar, this is actually in a downtrend on the weekly chart here. Move to a lower bottom, and this is corrective at the moment. Unless we take this high out, this is corrective, and you should be anticipating that maybe it's going to form a lower top at some point. So whilst you're seeing the day chart in an uptrend, this is the day chart. There's all these day charts. This has been rather range bound for a good, since the middle of December. Well, we're not quite in the middle of March, but that's what kind of January, February, March, 3 months of a lot of range bound trading. So we're coming, we could definitely come up to these highs. So it's worth thinking about where could price spike up to tomorrow's job figures, these highs. So from 27.71 up to 27.85, you've got all these highs, 1, 2, 3, there's 4 highs there. There's a further one up there at 127.94. All right, so there's a big resistance area up the top. Of the weekly range, we've been a pip or two, I think just short of the 7% retracement and just short of last month's high here. So we're at sellers levels. Can you see it? Maybe you set up to sell up at such a high level. You may have just touched the 7% level. So if you were trading at the 7% level, could hold your stop just above last month's high. You're actually in profit at the moment now. It's not easy. I personally would be looking up here, see if price can come up here or close. Can it come up here? Let's just drop to the 50-minute chart. It's not doing much in today's trading. Could have a fib drawn across that range. Could watch up here at 127.52, the 7% level. What does price do when it gets up here? I wouldn't just click in there because it could come up to the higher level. But I would start to watch up here for some form of failure. Can you see your intraday setup to sell? All right. It's at very high levels. I know it's in an uptrend here at the moment, but we're at very high levels. So I'm not trying to be a seller just for the sake of it. I don't want to buy at such high levels. Yeah, if I was going to be a buyer at the moment, there's this top here to this top there. So I would say if I wanted to be a buyer, I would need to see price come down to this area, which primarily has been resistance over the last couple of weeks. All right, so it would be from 126.91 to that high at 127.70. Price was coming to this area. So you could draw a fib in line with the 4-hour uptrend. All right, 79% level of that range coincides with your 26.91. So looking for something like this selling down into this area. Can you see this hold here? So you can see you set up to buy to then trade up and retest this area up there. So there's two sides of the market. That's one way of looking at the market. And the other way would be watching for this to come up here and then fail to then move down. There's a strong resistance up here. So you don't want to be buying anywhere near there. It's fine to be a buyer down here for the idea this is going to be support to trade up, try and break through. But you want plenty of room to manage, get to break even, and then you can assess what happens up here as it's trying to maybe break. All right. Pound yen. All right, did hold in the area that I was talking about on Tuesday for maybe a good 3/4 of a day. But then the dollar yen's been selling off and this has given way. And very much like the Euro yen, it's showing this lower top now to a lower bottom. All right. And we're, as I've been saying, at very high levels. We've got these monthly tops to the left over here. So really it's struggling at these monthly tops to really keep itself going. Monthly trend is up here and the weekly trend is up, but we're starting to change, certainly change trend on the daily. And I don't know if we can maintain above these weekly highs. So I'm actually going to maybe just take those monthly levels off from back in time and we'll just reference these weekly highs. There's one here. So I'm just using these levels because they're newer. So the market will probably reference these a lot closer, 188.658. Or that weekly level there. I might just use that as what the level there. This one kind of broke this area, so we'll use that as a primary weekly level. And hopefully just from a little bit of fib work, this is getting close, or it's at the 127 extension to the downside. So at some point, we're definitely in the area of taking profit in this decline. According to the fib tool, we want to then look for a rally. And we might bounce off this weekly level in the short term. I would start to watch, drawing a fib down from that high to low and start to watch to see how this rallies back up and look to the 62-79% area or maybe the next lower top to format. All right, so that's going to need to do a little bit of work before it gets into an area where I will look to try and sell in line with the start of this day chart downtrend. All right. Now, if we get a very aggressive move down, we may not get this rally up here. So if we get a very aggressive move down, let's say to this high over here, then we may just come up and we might see over the next week this area become resistance. All right. So first of all, we have to wait and see what price wants to do at these two tops. But in a perfect world, I would, now be looking for, this is down. Could it come up for a nice rally? Can you see an opportunity to sell in this area. So that's at the moment, unless the fib needs to be adjusted, 62 levels at 190.06 and the 79% levels at 190.55, that area there. I suspect we'll maybe need to readjust the fib, but we'll have to wait and see. All right, let's get into the Aussie yen. Now, I know a number of people that attend the webinars have gotten short at the top because I've been discussing the 20, to the weekly chart, been discussing the 23 high, the 22 high. That could be a very strong area of resistance. We often fail at the last year's high and last year's low for a turnaround. So we're failing at last year's high at the moment. Oh, it's getting a bit choppy in here at the moment because the Aussie dollar's been moving up, but starting to hold below this level here. So this, if we get any more upward movement, this is a very good level to watch. 97.87, so 97.87 up to 98. Does that remain as resistance? That would be a primary level intraday that we'll be watching. You can see on the last 4-hour candle, we couldn't quite get there. So any opportunities for this market to move back up at the moment, watch 97.87 up to 9800. If we draw a fib across this decline on the 50-minute chart, 79% levels at 9804. That would be a great level to watch if we came up, because we're back down support down here. So we're probably going to have a bounce in the short term. So can it come up to, 9804, 9800? Of course, it has to get above the resistance level. So the first level to watch would be 97.87. What happens there? You can see today, intraday, as we were coming back up to that level, it couldn't get there. So maybe the sellers are quite clear just sitting in that zone. Quite happy to sell now at that level if price gets back up there. So I would be, looking for the opportunity to let the market rally back up, and then look at some levels where I'd anticipate price to stall and turn around and look for yourself to sell. So 97.87 would be the first level. Beyond that level, 9800 to 9804 at the moment. Now, I would say as well, as a caveat, I'm looking at the downside because of the failure from up here at last year's high, but price could bottom out down here if it wants to. What I can certainly notice on the 4-hour chart is that we have an area of support here, an area of support here, and today's movement down hasn't traded down there. So it's not tested this area or this area. So if you're more bullish, then there's maybe the opportunity to draw a fib this way and maybe buy at the 79% level. We're almost there now. Stop just below here for a move to the upside. So there's always two sides to a market, depending on your direction approach. Is we could see this actually move back up to maybe retest the 22 high and the 23 high. So 98.43 is a 22 high, and that's a 23 high there. So there is a potential for that, but likes of the euro and the pound have been very negative, so I'd be a little bit cautious of maybe being a buy in the face of the gain in yen at the moment across a lot of the pairs. But there is some, on just purely taking a look at the 4-hour chart there, the structure is actually bullish down the 4-hour chart until these lows are broken. Okay. All right, now the Aussie dollar is moving up. A bit naughty this week because if I get rid of this fib, we actually had a down week this week at the start of the week, giving maybe the idea that, we had a down week last week, down week this week, the idea that we're forming a lower top here. But of course, now we're having an up week too. So what is happening? Ultimately, at the moment, support is coming in at this area of old weekly tops from 65.22 down to 65.11. So sometimes trading is not easy. Early in the week, it was starting to show that it wanted to move below that area, but now, of course, it's moving back up. Now, a clear area of resistance is just here, where we had about 2 weeks going sideways, and every time it got up to this high here, 62.21, we were holding there and eventually trading down. So whilst this is starting to show an uptrend on the day chart, the headache for a continued upward move is quite clearly here. Now I was anticipating this was going to move further down because the weekly trend was starting to be confirmed to the downside. But then, of course, we're having an outside up week. So are we just coming back up to previous sell levels? So that's 66.21 level. Or are we going to be moving higher? So at the moment, we're at day chart top. So it's not a great area to be a buyer at if you want to buy. Personally, I would just be waiting to see what happens here. And what we might be seeing over the next few trading days is we might come up to here on the job figure news and hold, or we break above. All right, so this is really the primary level to watch. Does that act as resistance to trade down from over the next day or two, or do we see price action break above it and does it become support? All right. I mean, the primary trend, if you look at the monthly chart, let's go to the monthly chart, is down. Let's just get rid of that fib. We have a lower top, lower bottom, lower top, and we're trading within the range of last month at the moment. Now, if we have a month up, I suppose we could say there's a question of we still have a lower top, but we're going to have a higher bottom, so then it becomes mixed. And the question could be maybe we're forming a higher bottom here to then break above these highs over the coming months. We'll have to wait and see. Not easy at the moment to. At the start of the week, I was thinking, okay, we're going to have another month down because we're starting to put a lower top in on the weekly, but now things are changing. So I'm just on the sidelines. Primarily looking at 66.21 as the line in the sand. What's going to happen there? Of course, today at the moment, we're moving up. We're getting very close towards, well, we just, we're, like I was saying on the pound and the euro dollar, this was the kind of imbalance. It actually had an outside candle, so really the imbalance starts at the top in my mind. So we're just coming up to fill the whole imbalance of the job figures a month ago. Of course, we've got the job figures tomorrow, and that became the monthly high. So that monthly high, 66.09 up to 66.21 that's a selling failure point. What if we get up there and we start to hold, you can see on the 4-hour chart all those 4-hour highs over here. This very choppy nature before we broke down last month. We're coming back up to where we consolidated before we broke down. So that's where the sellers were in clear control to then move the market down. But really we're stuck between approximately 65, 66. So the question will be, when we get back up to testing the 66 area, up to 66.21, is that once more going to be the top of the market? Trade back down. Some of these pairs are very range bound at the moment. All right, into the New Zealand yen. It's just on a little bit an area of support at the moment. That is a weekly high that we're trading down into. So this, if you're very bullish the New Zealand yen, the weekly trend is up, and we're at the 62% point pretty much. This could be the buy level for the next leg up. That's if you're on the buy side. So it's just having a little bit of rejection there. It hasn't quite traded at 62, but the primary level is that weekly high at 19.98. So that's a level to watch. What side of the market? We're obviously seeing some yen strength coming into the market. for this pair, if we, start to see this holding at 90.98, so let's call it 91, then maybe we're trading back up. If we get a clear break by the end of the day today below 90.98, 91, then that's going to be a primary level to watch to be resistance. Okay, so at the moment for me, it's just in that very important questionable level. Is this where we've finished the pullback? Because you can see we held here. When we broke above that area last time, broke above the weekly high, we pulled back for support, we went up, held, a bit short, testing. So on the 15-minute chart, it's definitely reversing at the moment. There's been a trend line break, so if you're keen to get long this pair at a very primary level, then it's starting to reverse back up. Maybe it's now your time to get yourself long. So go back to the 4-hour chart. If you're on the short side, looking for a break below this 90.89 level, you could simply be monitoring this fib range and monitor the 62 to 79% area. Just want to see where I'm getting that line from. Right, there's a weekly high here, there's a weekly high there, so we've fallen below one and we're holding on top of the other one. So on the 4-hour chart, 79% level of this range that we're performing at the moment overlaps with that weekly high at 91.50. So depending on what side of the market you're on, you can be looking for a buy here to trade up, or you could be looking for a sell maybe up at 91.50, that area. All right. New Zealand dollar. Very choppy. It is potentially slightly bullish here on the day chart. Higher top, it's putting in a higher bottom here. And let's not forget the monthly trend is down, like I was showing on the Aussie dollar. That's the lower top on the monthly chart up here. That's the lower bottom. That's the lower top on the weekly chart. We're not as aggressive up as we're seeing on the Aussie because this is a lower top and we're not having an outside day up. We're inside the week before at the moment. We've got a very similar level of weekly support here where the market is getting support. All right, weekly low here, and that zone is offering support 60.86 down to 60.55. So it's a higher top, higher bottom. That's a 79% retracement. So potentially we could be moving, we move up within the fib tool, the 127 extension gets you back up to this sell zone at 62.74, 79% level there, and that high point and a high point here. Because we moved below that level on the way down and it became resistance in here. So we moved down, came up, this area became resistance. Of course, moved down, got very choppy in here. But now, we do have an uptrend here on the daily in the short term. So we could actually be moving up like so. And then the question will be what's going to happen here. So that's, if that's going to continue up, this is a primary target and a primary failure point. So for our chart, now this was a drop down after the interest rate decision last week. So whilst I was just saying, from a day chart perspective, yes, we could get up here. We're coming up to fill this drop here. So whilst this, has a suspicious of a higher top, higher bottom here, this could actually stop opposite this resistance level here at 61.58. There's your imbalance. So really, we could just retrade it in the range from that high down to there. There's a 79% level there. You have this high area of resistance there. Because price broke above this high, so as it became support here to move off and up, then it became support here, and then it broke below. So we're actually coming into a very clear area that got broken last week. And whilst I'm using that high as a fib, that is actually the high of last week as well. So it's worth just looking at the fib range from the high of last week to that low. And there's a 79% level there. So in this area, there's a couple of things going on just around here that could see the market sell down from that area. So, worth watching on the 15-minute chart at the moment as we're heading into this 61.58. What starts to happen there. All right, that's my thoughts on New Zealand. Dollar CAD. So this is how I drew it on Tuesday. We're at the 62% pullback on the day chart here. We have an imbalance, so it's been sideways drop. Now really, if price was to trade above that little 4-hour high there, that's going to maybe confirm that we're moving back up, because I can see a little imbalance here that we've just come down to fill. If you like order blocks, there's kind of an order block here. So it is most definitely worth watching this 62% level for a reversal back up today. And just want to check the news. Don't have any Canadian news coming out later, but we do have US unemployment claims, so maybe wait for that to pass. And then, if that level starts to hold, opening up another platform. Sitting on top of there, we've got the 13500 level down here at the moment. So if you see a trigger to be a buyer, it's a little bit sideways at the moment, but you could be looking for a trend line break, swing point break. Swing point break would be a break of this high here. So it broke above that high point. That could be a trigger. Could be putting your stop just below here. We'll move back up the range. There's an imbalance here that may need to be filled today or over the next couple of trading days. So, excuse me a moment, got something on my other screen happening. All right. All right, so it's definitely holding there down at 135.03 to 13500, 62 level and the figure. You could just be buying here and obviously putting your stop below. You could be using my 100 pip method. You could be buying at 135, stop at 134. So stop at 134 would be underneath this swing point somewhere down in this zone, which probably doesn't need that much. They could just be a little bit underneath this low here. That's 135.40, so maybe having you stop at 135.30. So about a 70 pip stop. Anticipating this is going to hold as support to move up. All right, dollar franc. This is my 4-hour chart, how I had it drawn out, just to the daily. We've had an upward move here, and then we're pulling back. And we're saying that these highs over here could act as support. And I was saying you could watch for a further retest of this low, the 79% level on Tuesday. So we're quite clearly tested that level, and we're just in between the 79 and the 62 level. So, and on top of these highs to the left. It's difficult at the moment just taking a trade, I think, with these US pairs, because we've got more US news coming out in the job figures tomorrow. Nobody knows what the information is going to be. And of course, Powell's testifying once more. So seeing some kind of trigger after a news event would be ideal. But if you just like to be trading pullbacks, this is the pullback zone. That was the last day chart upward move. This is the corrective pullback. So buying in here, stop below here. Yeah, stop below 87.78, underneath here somewhere. Looking to see if this now wants to move north once more. You could obviously go down to 50-minute chart and have a look. And let's just get rid of that. Once the news is passed, you could be looking for some form of a trend line break to the upside. This may come down to hit the 79% level when the news comes out, and then does it hold here, and then do you see a trend line break to the upside? All right, dollar yen. Or on Tuesday, I was discussing this area up here where I thought it was failing. This kind of 279% level area on my 4-hour chart. Now, at the moment, we're very overextended to the downside, so I would wait for the next rally. You can see, price comes down, it rallies, then we've had a very large move down. But really, like I've been saying on the other yen pairs, I think you need, if we go back to the day chart, the current fib drawn was here. We've almost been down to the 200% point of the fib tool. So now, look for the next rally, which there was a minor top here. So I draw my fib from that top to there. Keep dragging that down if it keeps moving down, and then look for the next rally. So there's a weekly top here. We go to the weekly chart. What we're seeing is ultimately now we failed at this weekly area, and we're moving below this area of weekly support resistance here. All right, now it might not be able to hold below there. It may come up for a rally, or this level here, 148.80, could be resistance. Just a 4-hour chart. You see intraday today, when we broke below 148.80, that candle became resistance there. So it may not be able to get back up into this area, for a nice rally. With this may go down a little bit more, and then any rally should be watched at the moment at 148.80, I think. 148.80 is the first level to watch. Any rally points, could well be made at 148.80, maybe up to 149. So look for a rally. Can you see you're set up to sell a rally at the moment? We could have seen maybe the US dollar is going to sell off, or at least, the yen's getting stronger. We could see, if we go back to the weekly chart there, kind of a double top up here. We've sold off, we've rallied. We could be seeing the next major, down to there at the moment before maybe having a rally. A long-term move down to here now. Then we could come up and then, kind of affair. So from a fib tool now, we're kind of failing at the 79% level. We're going down, and then from the bigger look at the chart, this double top here, this could be the starting point of the major sell-off for this double top. And the double top price targets down here at 102.49, which, we're not going to get there anytime soon, but, maybe the market's looking at the fundamental data and starting to position itself to the downside, and we're going to start to see a very maybe clear technical shift, lower top maybe forming here to a lower bottom, which is going to, of course, put this bigger pattern in place. So it's definitely worth looking for the opportunity to sell a rally. Of course, if this is going to see quite a large run out, play to the downside, the other yen pairs potentially are going to do the same thing. And we've been seeing a very, quite aggressive sell-off on the euro yen today. So all right, so back to my 4-hour chart. Clearly moved below 148.80, so that was the primary level now to be resistance on a rally, and start to watch that level. We've also got last week's low up here that we could definitely come back up there in the next 24 hours at 149.20. Right, I was finished with gold. Now on this particular chart, so the price feed I've got on this live chart from ACY Securities, we haven't taken out the high here, but I was looking at another chart on a different price feed, which is above the high. So this was a very spiked high, and price feeds can be different from one platform to another. So depending on what platform you're using, which broker feed you're using, you might actually be above a high point. So I don't know if this is a little bit erroneous when you reference it to some other prices that you might see on another trading platform, but in any event, we're using this price feed as the highs and lows. So what we definitely know is it's very aggressively to the upside at the moment, and it's not pulling back. I don't like buying at such high levels, and I like to be a buyer after maybe this has a pullback of 1 or 2 days, 3 days, and it's not doing that. And as I was saying, be nice if this could pull back to the clear area of resistance that we've broken above. We've broken above 1, 2, 3 highs, in fact 4 highs including this one. So there's a clear area that should turn to support here. I know we're a long way away, but the market's been moving up very aggressively. Is at some point, we could come up to this high and stall. And then, longer term, I'm looking at this, over the next couple of weeks. What does it do over the next couple of weeks at the moment? Because at the moment, it's just way too high. We could come up here and fail. So that's well worth watching 2190 or 21, let's call it 2200. That's going to be a clear price point, because even on this chart, we haven't traded at 2200. So 2200, I would think, being such a good price point, will be difficult just to slice through, but we'll have to wait and see. If we start to see that holding, we could well come back down to the 2088 level here. If you're wanting to get long, the 4-hour chart here is clearly keeps having high tops and bottoms forming. That's the current move up. Keep dragging that up if price keeps moving up, and wait for the next dip. Wait for the next dip to the 62.79% zone of the retracement. Don't get caught at the top. The last little low that you could have drawn a fib from would have been this area here. And at the moment, we've touched the 162 level. So we're at profit taking areas of, the little minor swings here. Up, pull back to this just short of the 62. We're up at the 162 extension. So in my mind, you now want to wait for that next 62% pullback or 79% pullback if you're prepared to be a buyer at such high levels. All right. Right, so that's my thoughts on gold. It's going up very aggressive at the moment. It's not doing what it did last time when it broke above those highs, where it broke up one day and then completely rejected in the same day. We're having countless days moving up at the moment. Go back to the day chart. This was a massive rejection here, whereas this is looking very different. None of these candles are really rejecting. It's just day up, day up, day up, day up. But it's worth noting, for this to reverse up here, all we might need is this has another day up here and another day up. If this doesn't have any days down and comes up to this high, all we need really to confirm a reversal, once we get up to there, if we don't have any days down, is a day down. If we get a day down, that's a trigger in itself that we're holding here to reverse, and we could then move all the way back down to here. So maybe you've missed the long side at the moment, but maybe there's the opportunity to get to the short side once we get up to the top. So I don't trade gold, but I mean, looking at it logically, that's a clear sell zone at the top there, the all-time high. So what does it do as it hits the all-time high? If it can hit the all-time high, we don't know if it can get there yet, according to this chart. All right. Right, so that's my thoughts on gold. Any questions before we wrap it up? Just put it in. Next week from me, webinar front, more analysis next Tuesday. Next Wednesday, I will be taking you through trend lines, how to draw trend lines, identifying a change in trend using trend lines, and then more analysis next Thursday. So if you want to join me next week, just head over to the webinar page and register your interest. I'm not the only one on here, but you can other people doing webinars. So if you want to join somebody else, that doesn't bother me one bit. But come over to the webinar page and have a look, see what we are presenting next week or over the next few weeks, and make use of all the free webinars that we are delivering, okay? All right, Steve. Thank you. Just thanking me for my analysis and looking forward to the next week of the NFP. It's going to be interesting to see how the NFP reacts. Obviously, we had a very strong sell-off last. The big thing I'm noticing at the moment, just in relation to the NFP coming out tomorrow, and let's have a look at the euro dollar because this is a prime example. That was the NFP drop last month. And whilst we're fractionally above that area, we could well be in the exact same area on a number of pairs, could be in the exact same area that we're in come the job figures for this month, which is really telling you that the market is rather range bound. It's just reacting from one news event to the other. With the central banks not cutting at the moment, the markets may be anticipating that a central bank may cut from one nation to another. We sell off on a news event, and then through the month we move all the way back up. We could well sell off aggressively again tomorrow, and then we could be moving all the way back down to the low last month. It's not easy with these news events. Very much focused on what does the news come out and how does that then translate into, is the US going to be cutting interest rates soon or later in the year? I think the market's expecting that the US will be cutting its interest rates in this financial year, but will it be right at the back end of the year, or will it be sooner? And every news event, the market's then interpreting that data in relation to that. So, all right, so it's going to be interesting tomorrow. Just be aware that it's going to be volatile with the Eurozone interest rate decision tonight, and then the US job figures tomorrow. Okay, everybody. So have a great rest of the trading week, and look forward to seeing you next week if you have the time. Thanks, everybody. Thanks, Savannah.